Hello traders, Mark here, hope you're well. We're going to take a look at the euro dollar on a daily chart, potential setup and also manipulation in the trend. If you were to zoom out on the daily, have a look at this and you'll see that the market's been heading high on the euro dollar, and we get this minor little sell-off that is nothing of relevance at that point, but then it goes on to become support, and then it goes on to become support several times. And what you'll find in a trend is moments where price will pause and will start to range. So you get that where you get this double, triple top, and then price comes back down to this area, bounces again in here, and people are going long, and also in here on those retracements, hoping that the market will follow through at least to the other side of the range or beyond like that. Now the traders who go in here, they've got a bit of a predicament, because when price elongates like this and it heads up pretty quickly without much in the way of structures on the way up, it makes it challenging for people to place stops. They don't necessarily want to be too close to price, but at the same time they don't like going too far away, so they get forced into it. So where you've got this level of support building, if you were to go long in here, you're going to have to place your stop below this structure in here, most likely. Same applies for the people who are buying these pullbacks. So if you stick the old fib on there, right, 61% pullback. People go long, again, those traders in there will place their stops really in the only logical place they could stick it, trying to manage risk, etc. But unfortunately, as they go long, the market doesn't follow through and it goes crashes down against them. Now that then stops them out, and if something wants to do some buying, it's going to be able to do it in the face of that forced liquidation event, because if you're a buyer, then your stop loss orders are sell orders. Your stops get triggered as price goes down through the level, right? There's your stop, somewhere like that. As price goes down, if you're a buyer, you must sell to exit, and as that selling occurs, it allows something to start buying. That's why you get a break pullback most of the time within a structure, because it makes sense, right? If something big starts buying in the face of that selling, it will bring it back to the level more often than not. When it breaks like that, you're going to have breakout traders go short, and you're going to have retracement traders trading the break pullback off this area here, right? And that 38% into a prior level of support. Their now belief is that that becomes resistance. Now you get an engulfing outside candle as well, just to boot, and they go short, believing that's going to follow through. It does go for them a little while, and it even breaches the low of that prior swing low. So let me just draw that in here, right? So just walking through the logic, the stops get nailed, breakout traders come in as well, retracement traders come in, and even breakout traders of that structure, selling, allows something big to start buying, and then the trend continues. Now, so when you do see something like that, oftentimes the trend will breach that prior the market will breach that prior structure above or below it, which is what it's indeed done. The reason for these manipulations in trends, they're a little bit more challenging than the Bobby Basic manipulation at a horizontal level, because sometimes they're tough to see and they can be a little bit complex, but that's a good example. You want to make a screenshot of that and keep that on your desk, so you know what to look for. More from a broad perspective, because it's not always the same, it presents differently, but that's a good nice example for you to learn from. And then going to this level, we've got multiple touches. Need a couple of touches as a minimum. There's your entry cheese for those traders to go short. They place their stop. So this is like a real-time example of a potential manipulation. You never know whether or not it's going to turn into one or not, but this is how it looks. So train yourself to look for this. Traders go short in here. This is the tempting price action to get them in off the sidelines. The placer stops above the level, price goes up through the level, stops them out. They're selling, so those are buy orders that are triggering. Breakout traders are willingly coming in. Then you would expect, as I mentioned down in here, some type of retracement to the level and then a potential capitulation from there. So that's what a manipulation could look like and does look like as it's unfolding. You don't know at this stage whether or not it's the trend is just going to continue higher, but this could be a manipulation and then down. And if you think a couple of steps ahead in terms of US interest rate, the trajectory of them in 2018, there's like an 81% chance that they will hike in March, and the belief is there's going to be 3 or 4 hikes this year. So the market tends to look a couple of steps ahead, and this would be a great opportunity, if it is a manipulation, to buy dollars at a nice high price, and trade it down. So this looks like it could potentially be a setup. It's not there yet, and yes, a setup could be still in play even if it's broken 200 pips like that. And you know, that might annoy someone, that might you might think balk at the idea, but I made a very similar call on the euro yen not that long ago, and it did indeed sell off. So same scenario, right, where 250 pips, the manipulation didn't quite occur because the supply demand equation was messed up by the ECB minutes, and that can happen. That will always happen. You can find the best manipulation in the world, but if some news event comes out that's really unexpected, it was unexpectedly hawkish, it was only a medium impact event on the old news calendar, but because it was so hawkish, that changes the landscape. And once them news algos kick off, you know, it can make a mess of any setup. So just bear that in mind. But yeah, it was just another example of what many people would believe to be completely broken out. If you got a room full of 1,000 traders and asked them, is this a breakout, there'd be very few people saying no. With the exception of me and people who trade this way, who've learnt from me, most people would look at that and tell you that that's a full-blooded breakout. Nothing could be further from the truth. And the more convincing it is, it just means the more people pile in on the wrong side, potentially, of the market. So I hope that helps, guys. Take care.